Cardano. Let's see if we can find some decent setups here. Now you'll notice this market doesn't have a ton of long-term history, and it's also in the midst of being a runaway market. So this will be very interesting to see if there were signs that we could have gotten involved in what has recently been a 600% gain in this marketplace. Well, the first thing you do is you look for any support or resistance, and you can see that we did try to rally at that point, but struggled to get above the 40 cents level. And, we broke through it, we rallied, and then we just spent a good 2 years just kind of hanging about. The 5 cents to 10 cents area really looked like it was going to go nowhere, but those were pretty tough times for most crypto traders. They were, the smart ones were just simply building up their portfolio, and you can see it's paid off quite nicely. So the very first thing that I would point out is that there is a certain lack of clarity, but you can see lots of wicks here. So one would expect that if we revisit this area, there might be a little bit of noise. And it's 25 cents, so I suppose there's a certain amount of psychology involved in it. And you can see that we pulled back to there to find support. It wasn't like it offered a ton of resistance on the weekly chart, but clearly it respected it on the way back down. So, you can leave that line there, I suppose. You can also put a line right here at 10 cents. I say that because of this area here. You can see that it was attracted to there as well. Okay, so you can see volume was almost nothing before 2019, has been picking up as of late. Let's drop down to the daily chart. Things become a little bit more manageable here. So the first question most of you are probably going to have is, how could I have made this move? Well, or been involved in this move? There's a couple different things I see here. First thing I see is there was a triangle there that broke to the upside. Broke pretty significantly, once you got through these couple of candlesticks. Another thing that I would point out is that we had been going sideways and doing nothing for a while, and then started to see the volume take off. And I'm willing to bet that the Bollinger Bands will show a familiar setup. And you can see we did in fact get a break above there. We got a little bit of a pullback, but if you put your stop loss on the other side of the squeeze, you were never anywhere near being in trouble. And then you got the same setup again, volume picked up, and you've really been off to the races since. You broke through the 25 level on increasing volume, pulled back, formed this hammer, which then in turn ended up being part of a larger triangle, and we've taken off. Another potential setup that I see, go ahead and hide the Bollinger Band, it's based upon this candlestick here. So we have broken above the 40 cents level. Now remember, 40 cents mattered because that was that attempt there to recapture the market when we first started. So now that we have taken out 40 cents, notice this candlestick. It's a doji. If you break the top of it, it means something. It means that we are going to continue to push higher. And it's just been taken off since then. Now the problem that you have, and this is maybe a lesson in what not to do, if you get into the trade down here, like for example, you take the break of this, you put the stop loss on the other side of this doji, and that's fine. You're fine. Nothing to worry about. But unfortunately, far too many traders, and this seems to be especially true with crypto traders, they see something like this and they want to buy. But what's going to happen is sooner or later you run out of momentum and you fall. Markets can't do this forever, not even crypto. So if you're not involved at this point, you're looking for a pullback. You're looking for a place that makes sense to perhaps look. Remember, the market likes big figures. There's a certain amount of psychology to it. So 50 cents might be an area where you might be interested in. You could also take a look at this most recent move. And you could say, okay, well, I want to buy it if it gets somewhere around half. So that's 55 cents. 61.8, 50 cents. So that's another reason to think that the 50 cents level might be important. Let's put some exponential moving averages. Well, let's just put some regular moving averages. I guess this is the daily. So let me go ahead and make this red and make it 50. And we'll make this 200. Make it black. Okay, so the 200's not even in play. We did get a cross and a spreading of the moving averages, so that was the beginning of your trade. Kind of a moot point now, but clearly you are seeing that the longer-term traders had been involved. So the question is, what kind of action do we get? Do we go a little higher and then maybe drift lower with the 50-day EMA trying to come in at the 50 cent level? I think it makes quite a bit of sense. Do I know it's going to happen? No, of course not. Another thing you need to be aware of is this could go to $2. You just don't know. But what I can tell you is if you buy it up here after this type of move, odds are, and that's all you're doing is you're playing the odds, that you're going to get, you're going to find trouble. Doesn't mean you won't be fine a few months down the road or whatever, but there's no need to tie your trading capital up. You can see that we have been outside of the Bollinger Band. We're starting to fade back into it. That's another sign that maybe we're going to roll over. So here's that Bollinger Band squeeze. And there's that familiar breakout. We take off, like I had said. Here's another example. And then there's this hammer. So that brings up the 25 cent level. We break this resistance barrier, and then we come back. We form this hammer right off the middle of the Bollinger Band. Break the top of that candlestick. You put your stop loss on the other side of it. You never find any trouble whatsoever. This is interesting because the 200-day EMA has held a couple of times. And what's even more interesting to me is that there was a hammer right here and then right here at the bottom of the Bollinger Band. So in a lot of ways, Cardano was screaming that it wanted to go higher over the longer term. You can see that we had the golden cross here, and we never crossed back over. So technically, if you're a moving average crossover system trader, you've never gotten out. You're in at roughly 5 cents and you're hanging on to 75. Again, that's going to be more of a longer term believer type of situation, but clearly you can see how that worked out for them. Here is a pattern that I find interesting, and that's because it's actually a failure. You know, remember I had mentioned at one point that sometimes a failed pattern is worth paying attention to. So look at this ascending triangle. This tells you, hey, we should be going higher. But notice this massive shooting star at the 10 cent level. We broke back into the triangle. Now, typically when you get a breakout of a pattern and you go back into it, that'll negate the whole thing. And quite frankly, a lot of times you see the exact opposite happen. So if the buyers have been pushing and pushing and pushing, and then they finally get broken through, well, what do you think happens? What happens is everybody in this area of the trade and this area up here are all gradually losing money. So it was a nice setup. And then you can see that down here, we did find a little bit of support. Makes sense. That was an area where the market had bounced from. So that is a trade from a failed signal. You do get those occasionally. Nonetheless, this is a market that offers plenty of opportunity down the road. But again, you don't want to pay 75 cents for Cardano when exhaustive moves like this almost always pull back. And a lot of times they pull back rather quickly. So let's say you can get in at 52. Well, that's a lot better. It gives you a lot more runway to pick up profits than paying all the way up there. So with that in mind, you can see how that was traded and how we could even use a failed pattern to place what ultimately would actually end up being a counter trend trade. Although that's not necessarily, what we were trying to accomplish. But clearly, it looked like the market was ready to take off and then it failed. In the next video,